I have bought an asset few years before at some XYZ price. Now I want to sell it at some XYZ price. Will I be encountering a capital gain or a capital loss on this transaction? How I can understand it? This is the question faced by many of the people. So today with the help of this video, I'll be answering four major questions. First, what is capital gain? Second, what is capital loss? Third, what are the types of capital gain? Fourth, what is the impact of capital gain on different asset classes? Hello everyone, I'm Rohit. Welcome to your channel. Let's understand each of the questions in detail. Capital gain arises when you have bought an asset at a lower price few years before and now you are selling it at a higher price. Example, if somebody has bought an asset maybe at 1000 rupees 3 years before and now they are wanting to sell it at 1200 rupees. So they have got a gain from this transaction of 200 rupees. So this will be coming under capital gains. If somebody has bought an asset at a higher price few years before and now they are selling it at a lower price, maybe you can understand it with the help of example, like somebody bought an asset at 1000 rupees, now they are selling it at 800 rupees. So you have encountered a loss of 200 rupees. So this transaction will be under capital loss. There are two types of capital gain. First, LTCG, and second, short-term capital gain. LTCG means like you have bought an asset at few years before, maybe 5 years before, and now you are selling it. So you have kept it for a long duration and now you are selling it. So this will be coming under LTCG. This is different for different asset classes that we'll be discussing at the last part of the video. And the second is STCG. STCG is short-term capital gain. What it means is you have bought an asset and you have kept it for a shorter duration, maybe few months, and then you are selling it. Then this transaction will be coming under short-term capital gain. So how it impacts the different asset classes that we'll be discussing at the last part. So now the fourth part of the question, what are the impact of this on different asset classes? For this, let me share you a table. So in this sheet, you can clearly see that LTCG and STCG's impact on different asset classes. First, real estate. LTCG is applicable after 2 years in real estate. Till that time, STCG is applicable. In equity mutual funds, LTCG is applicable after 1 year. Till that time, 15% STCG is applicable. For the unlisted bonds, LTCG is applicable after 3 years. Till that time, tax slab of STCG is applicable. For listed bonds, LTCG is applicable after 1 year. Till that time, STCG is applicable, that is as per your tax slab. In the debt mutual funds, LTCG is applicable after 3 years, but STCG is applicable based on your tax slab. So this is the impact of different asset classes based on the asset classes that you are investing on. If you want to get your professional financial plan created and you want to learn money management, then you can schedule a free one-to-one with me. I'll be happy to tell you how I can help you on this. You can check the link in the description box. Do like and subscribe to this channel if you really like this video. Do share it with your friends so that they can also get benefit out of it. And don't forget to press the bell icon so that you can get the regular updates whenever any new video is uploaded. Thank you. Keep learning and keep growing.